Hey everybody, tonight's video is going to be titled, This is Actually What's Happening. And I think that we need a little bit of a reality check here because I think a lot of people are just missing this and getting caught up in minutia. As always, subscribe, click all notifications, let's do it. So what we have here on the NQ pretty clearly is what? A new closing high. Pretty obvious, right? If we go and take a look at the ES right here and just click on it very quickly, get rid of my 500 lines and say, oh look, here we are again. And what do we have? And then we look at the closes and we have a new closing high. So no matter how you feel, no matter what you think, the bottom line is we have new closing highs on the market. We all know what's going on out there. We all know the turmoil. We all know that we have these wars going on. Heck, we've all seen how things are shaping up out there right now. And the bottom line with all of it, and there is some stuff out there that we have to look at. You have a tremendous amount of turmoil with the president right now and J-Pow. We've all seen this today. It's going to be the meme that just keeps on giving. I mean, if that is not a meme, I don't know what is going to be. Does he get fired? Doesn't he get fired? We don't have a clue. And I don't really know what else to say about it. Is that going to create strife? Yes. You're going to have waves. Those waves are being bought. Every single time that I'm getting anything technical that's showing me that we should break down, they're just shrugging it off. Even today, we have this huge negative divergence. And by today, I mean it's been building for some time. And I've got one foot out the door here, right? Just like Skinner, give me 2 steps. But here we are. And if we look at this, I mean, there's got to be some Leonard Skinner fans out there somewhere, right? So if we take a look at how this is setting up, like, I'm waiting for it to crack. What's it do? No, it breaks the DTL, flips over, and wham, here we are. This is the kind of market that you're in right now. And I just think that if you just spend a couple minutes going through what I'm going to show you and just think about it and say, this is what we have. And here's where I'm going with this. You have some issues. And let's get rid of this magnet before it drives me nuts. But you have some stuff. You have some issues. And let's review it. And we'll review it from a macro perspective. And then we're going to view it also from what? A fundamental. And then we'll review it also from a technical. And this is important. It really is, because this is where people get screwed up, like really hard, because they tell themselves something. And then the thing that they're telling them is going to be, in my opinion, it's always a disaster. Like if they just don't follow what they really believe. So here we are, and here's the way that we look at the SPY. We have the macro, the fundamental, and the technical. And let's click one more and we'll get our seat right here. We should have cloned me right there. I don't know why it didn't. And so we get our seat. And the important thing about this is it's just all truth. Like you don't, when the fundamentals are out or the macro's out, you don't extrapolate it out. You don't say, what does this mean? It is what it is. So you have the macro stuff. So if we looked at the macro stuff, what would you say? Inflation, right? So that would be something. You'd go, okay, well, we have inflation issues. So we'll come back to the S&P in a second. But if we looked at the 10-year, is the 10-year telling us that we have inflation issues? So this would tell us that, hey, do we have a problem with inflation? Well, let's just drop this and we'll just drop a pin right here and look at it and go, do we have inflation issues? Well, here we are in December 17th and the 10-year was at 441. Oh, okay. So we're right where we were in December. Do we have it? Is the market saying that the bond market is going to give us inflation? Not right now. If we look at the dollar, what is the dollar telling us right now? Are we going into turmoil? Well, here's the low. We're bonking around. It's not great, but what people don't realize is that mega cap names, and we're just going to drop it from January so that you can see that the dollar's gotten weaker from January. And so then from that point on, just drop the line, mark it up. And all we're doing is just looking at what is actually happening. And we have a weaker dollar from this spot to here. And that means that you're down about 10% to 11% on the dollar since January. 50% of Mag 7 earnings, they come from what? Where do they come from? Non-US revenue. Really important to get this. That means that companies are actually going to have better revenue. Bigger conglomerates actually do better on a weaker dollar. That's why people always buy the industrials, because of the large process. And that's why European companies always suffer selling to the US because of the currency exchange. All right, so that is a really quick down and dirty way to look at macro. We could do it a couple different ways. I believe they have CPI in here, and we could do that as well by just going CPI and then looking at how that is. But I believe they have like the year over year. They at least have the core in here year over year. And we could just drop a line real quick and look at this on a monthly, click it down and go, okay, do we have an issue? Not right now. Could we have an issue as we've gone from 1.83 to 2.2? Maybe, or maybe they just front loaded everything. So is there an issue? Not yet. Could there be? Possibly. All right, so if we look at the dollar and we look at what's going on out there, let's see if they do jobless claims in here so I don't have to click over for time's sake. They do. So if we look at the dollar and we look at inflation, maybe there's an issue there. How about jobless claims? Are people losing their job? No. All right, so since 22, we've been in the same exact range. I dropped this line, if you remember, from the Saturday video, and hopefully it'll let me do it. Yay. And you'd have to go back to 17 or 18, and that was tariff 1.0. Right. And then obviously had the great financial crisis, and after that, obviously the pandemic, which was just a disaster. But since then, we've been in the same trading range. So if we're looking for that area that where do we really have the problem on the macro side? Like where is this problem? And then it comes back to here. Well, that's not go to the 4 hour. Hopefully they straighten that sucker out. There she is. So what do we have here and what do we care about? Macro, you don't have an issue. As much as we think we do, tariff on, tariff off, 10% tariff, 15% tariff. The one thing that we would have to take away from macro would be, does inflation kick up again? That would be the question. Does inflation uptick? That would be something. That is something that could happen. It's not happening right now, but it could happen. So that's something that we'd have to look at, and we would put that in the macro. Then you go and say, all right, well, fundamentally, what's happening? And let's just take a snapshot of what you're seeing happen fundamentally with earnings so far. All right, so if we look at the financial companies on earnings, and you look at something like a JP Morgan, biggest financial company in the world, absolutely crushed, beat by 16%. Stocks at all-time highs. Look at the XLF, all-time highs today. By the way, there's never been a market correction with the XLF at all-time highs, just for whatever it's worth. There never is. So if we look at that, let's go take a look at one of the world's largest investment banks. Okay, back to all-time highs. Disclosure, I have positions in both of those. So fundamentally, the earnings of the biggest banks in the world are solid, and they're growing, and they're beating earnings, and they raise guidance. These are the facts. They just are. And that's really what I want to go over. We can have our conjecture, we can talk about where we're going, where we're not going, but sometimes people just don't see the forest through the trees. They just don't see it. And sometimes you just look up from 34,000 feet and you'll get it. Meanwhile, we're in here whacking Tesla around for $3, right? Which I do. I'll do it too, but the real money's made in understanding this stuff, because then you'll get it. You'll wrap your noodle around it, but you'll get it. So if we go back to the S&P and we go to this, well, I guess we can leave it here and see fundamentally, what are we seeing happen? All right, let's start. So Texas, they sell it down. Why? Not because of bad earnings. It wasn't earnings. It was the fact that they said, we don't know if it's really good, but we don't know if it's going to continue because we don't know about the uncertainty of what? Of tariffs. We don't know what we're going to get. So when we go and look at that again, we have to realize we do have this issue out there. And just to bring it up again, is he going to cut rates? Is he not going to cut rates? This is the issue that's outstanding. And it really boils down to tariffs. So then we'd say, all right, they crushed, but they don't know if it's going to continue again. So do we have any other data points? And then we can go take a look at something like Tesla. And Tesla was an issue, but the reason sales were off was because of that bill that passed. So then if you take apart that bill, you would realize, as people in the community already know, that there's a huge deductibility in that bill for capital expenditure. So you might not know this and you might want to hear what I'm about to say, but there's a reason why Google raised capex. If you actually had somebody read the 60,000 page bill, which nobody does, you would understand that the reason they went from 75 to 85 billion is because now they can deduct everything that they're buying within a year. It's 100% deductibility. It's not spread out over 5 years. So why people will look at Google and say to themselves, well, this can't be, this isn't good, and we got to figure out what we're doing and how we're going to straighten this all out. We have real issues here, and the stock's down today. Okay, so just so we're clear on where the stock is from where it was, just so we're getting it. So we're upset that Google went from 192 to 193, and if we really look at it, you have about 10 days that ever had a higher price. Okay, maybe at $10 higher. So how about the earnings? Were the earnings good? They knocked the cover off of everything. Like literally everything. Beat, raised, every metric beat. Why is it down? I don't know. I mean, maybe because somebody's in at $1.50 and you just went to $1.90 and they're taking profits. Also, the option market makers were just really mean today. There's no other way to say it. So then when we have Google and we look at that, we understand that they're raising capex. So when we discuss this stuff and we look at it and say, well, what's really going to get us down? Well, it's going to be the capex numbers. There's one thing that's going to drive tech down. There's one thing. If Meta and Amazon and Microsoft all cut capex, we're done. It's the end. Just understand that when you start seeing the first capex cuts, that's it. That's the bottom. Like that's when we will go to a bottom. Like it will get bad. You're not seeing that. What you're seeing is money flow, understanding what's really happening. And that's why when people are sitting here not understanding the simplest of things like, why are we going higher? Well, you've been basing for a year. Why is NVIDIA going higher? Why is NVIDIA up 20 points nonstop? And what we have is we have a bunch of people that are really skittish, including myself, even doing this 26 years, because we just got liberated. So we're all like cats on hot tin roofs. And as long as everybody, boils down to this theory on reflexivity, but as long as everybody is still skittish, these drops are buys until the fundamental side of the market changes. It's not changing, it's actually strengthening, and it's actually getting stronger. And I would love to see economic data from earnings, not from soft data that you guys can present to me that shows me that I'm wrong. Because everything that you're looking at, and go listen to Google's conference call, everything that you're looking at is pointing that way. I'm not talking about like one-off types of things, like listening to Tesla's conference. Tesla's going from EVs to they want you to rent a robo-taxi that's going to have somebody that's going to talk to you like a cat. Like, I wish them the best, and what it is, and someday we'll all have a robo-taxi. We're all going to have a transformer. I got it. But at the end of the day, you have sectors of this market that are completely depressed. And I've seen this happen before. I'm going to clean all this off. But like the KSS trade, for example, people aren't getting when you're looking at this company that this thing has a tangible book value of all its real estate of 33, 34, 35 bucks. And people would say, well, why does it happen? Why does it stay depressed? Because that's the game. It's always this way. It's outcome versus expectations. That's how they move. People don't realize that A&F is trading 9 times earnings. So can we rotate into different sectors? Stay with me. Yeah, you can. Look, here's XBI. What's happening there? All of a sudden, biotech's becoming pretty popular again. Why do we think biotech's becoming popular again? Because people actually think this guy might go out there and he might be cutting rates to keep his job. Looks scared to death there, doesn't he? Or he just looks like he can't believe what's actually being said. Either way, the picture's hysterical, and you will be seeing more of those, hopefully in meme form. But for me, what I look at here when I see this and I really focus on the market, I'm rolling into other sectors. Take a look at what happened with the home builders. Well, surely they're going to roll back over. Well, they didn't. So fundamentally, we're seeing some changes. Those macro changes that we're talking about that are in these bills that are going to be passed, they're affecting the market. So then when we go and take a look at the technical side of the market and we're looking at things like the SOX, okay, so yeah, we're not at new highs on the SOX. All right. But you're darn near highs on the SOX. I mean, you're not that far off the highs. Just to be clear, you're 10% off. You have to look at it for what it is. And that's the ASOX, by the way, which just had almost a new closing high. You just missed that. And that's just the AI semiconductor part of the SOX. Also, if you look at the ESOX, you'll see that that's down more. But realize that a lot of this weighting is in ASML. And the problem with ASML for them is that they're in the Netherlands. So when we talk about that 100% capex deductibility, guess what you have happening? They don't get to deduct. So this ties us all back to this. And what is this? This is our stool, and this is the macro, and this is the fundamental, and this is the technical. And I'll go out there and say pullbacks, and I'll laugh. But at the end of the day, they're all being bought. We can sit here and look at these dojis and keep going through this on the technical side, and I will, because I trade different kinds of portfolios over different time frames. And I know that a lot of people don't do that, but I compartmentalize everything. And when I look at this and look at how the swings are doing versus where they are, there's nothing for me to do. I mean, we did a swing here in the community where if you're trying to get in the community, by the way, links in description. If you're on the wait list, please look for the newsletter or the invite. There's only 3 days left, and then I'm closing it for 30 days. But when we were buying this in here, everybody was moaning and groaning. It's $70 straight up. Look at AVGO. And the bottom line is, I don't know that this is going to do that this fast. Nobody knows this, guys. I'm going to just save you a bunch of time. Nobody knows this. And if I ran this scan, like when you're here, you don't know this. But what you're doing is you're looking at this over time, right? And what you're doing is you're doing this here, watch. And I wanted to keep tonight super informal. And I do have some names I want to show you real quick of some things that I think are definitely worth paying attention to tomorrow real quick here. But this is my point. What did my stool look like when we were all being liberated? You had no idea what was going on with macro, right? Fundamentals were up in the air. Technicals were disgusting. And so you have all this uncertainty, which breeds opportunity. Either long or short, it still breeds opportunity because you have expectations versus outcomes. They're out of whack. One way or another, you could have dropped another 10%. Right? This could have gotten a lot worse if he said, there is no pause, it's on. But the only reason he paused, quite frankly, was Japan started selling dollars and bonds. And they panicked. US blanked. It's a fact. When you see this, understand that this is pretty much everything. And by going through what I'm going through right now, I don't see the issues. I'm not saying you're not going to have pullback. I'm saying I don't see the issues. I want to point this out. ASTS has constantly done these secondaries. Obviously, they're putting satellites in space, trying to raise, money. Historically, it's an interesting time to get involved when they do this. Usually look for the pricing. The other thing that I would say to you is that Intel is in what we refer to as just a death spiral. If it rallies up, disclosure, I'm short this at the time of recording this. If it rallies up, they are laying everybody off. They are closing plants down. They're increasing their revenues because they're selling everything that's not now down. It's only going to get worse from here. Eventually, they sell for the parts, but they're closing the plants that they were trying to build all over the place. I don't see how this gets better, but when it rallies like this, it does present a really interesting spot to put on short opportunities. That is it. And do me a favor, comment on this, because I did this really informally, but it's really been on my mind to go through this. All right, that's it.